How do you see this? Because the opening is slower in that there's so much COVID going on that there are effective lockdowns in terms of economic activity. It hasn't been, off to the races whatsoever. But in the long run, it should be inflationary for oil.
Absolutely. So in the longer term, it should be supportive, definitely. That said, it's not going to be an easy recovery here. There's going to be speed bumps. It's going to be very bumpy. So in terms of just the next few weeks, you're essentially having COVID that's going to be ripping through 1.4 billion people, right? You've got Lunar New Year coming in less than 4 weeks. And so there's going to be a number of challenges here. We may not see as strong a rebound in demand as expected. People are going to be very hesitant to travel. That said, as we move into Q2 of next year, you're going to be seeing herd immunity coming through. But at the same time, too, elsewhere in the world, as you mentioned with Jay Powell there, you've got the lagged impact of interest rate hikes, not only in the US, but in Europe as well, which is going to lead in with lower demand, recessionary pressures coming through in the Western world, which is then going to reflect on weaker demand for China in terms of their manufacturing sector. So yes, at first blush, the easing of the zero COVID policy is going to be supportive for oil demand, but by no means will it be absolutely ripping it as perhaps some people think it may do.
How will Putin play into this in that, do you think that he responds in some way to the caps that have been placed on Russian oil, or is there some sort of retaliation that you're expecting that would impact the oil markets?
Well, at least from the crude side of things, we've seen the price cap put in place, we've seen sanctions put in place, and crude flows are continuing for the most part. So in terms of those seaborne crude flows, we're seeing a lot more heading into India here, simply being diverted away from Europe. That said, we have seen a drop this month, but that drop is in ESPO crude, which goes from the eastern side of Russia into China, again reflective of weaker Chinese demand as opposed to European sanctions there. And so we're likely to have a bigger impact on the oil market when we see sanctions put on the products, when that kicks in for February. But for now, it seems that flows are just being simply diverted elsewhere.
What is your forecast for oil in 2023 in terms of where you see it, the highs hitting, and what the average price could be? And in your view, what is the biggest swing factor to that forecast price, the biggest asterisk, if you will?
Sure. So we're probably going to finish next year at a similar price to where we are here now in terms of WTI, close to $80, Brent a similar level as well. And so on the supportive side of things, Russia remains a bit of a wild card there. China is going to be supportive as well. And then the third element as well is that we haven't got SPR releases from the Strategic Petroleum Reserve in the US. We've seen that drop by 220 million barrels this year. That has been bolstering and buoying US commercial inventories. That influence next year is not going to be there. And so we will see commercial inventories dropping, which will be supportive for prices. All that said, the lagged impact of interest rate hikes coming through and that pressure on demand means that it should largely offset these bullish influences to leave us generally where we are right here, right now.
But in terms of peaks, I talked to one oil analyst, Paul Sankey of Sankey Research, a couple weeks back, and he expected 120 a barrel to hit once again. I mean, granted, that's not the average price for 2023 that he's seeing, but that would be the peak. And that would imply, potentially gas prices going back to the highs that we saw over the summer, like $5 a gallon.
Yeah, we don't expect that. I think that's a common perception across the market that we're going to see prices in triple digits here. Yes, by all means, we could see that. We've seen that volatility this year. On WTI in March, we got to over 120, did the same in June as well. So by all means, yes, we could pop up above it. But the thing that we're still going to remain for the majority of this year below that level.